In other news, President Trump announced that he would be moving to cap credit card interest rates by 10%. Now, this is a very controversial and complicated proposal, but it is not new either in the US or history. And it brings together a very strange group of proponents. Good morning, and welcome to Life in the Markets. I'm Stephen Rohr, Wealth Manager at Life Financial, and I'm coming to you here from a cold, snowy, and icy morning here in southeast Pennsylvania. But it has made for some glorious winter splendor, and we're very thankful to God for that. What happened last week in the economy, in the market, and news otherwise? Well, overall, the market was fairly flat. The S&P 500 and the tech-heavy NASDAQ ended down almost flat, but down about negative 0.7%, where the Dow Jones Industrial Average ended down about negative 0.18%. So really about flat by the end of the week. The spot gold price hit a new high earlier in the week, but ended, about where it was the week before at $4,595 an ounce. So mostly holding steady. Silver jumped up a good bit, but then by the end of the week, leveled out a little bit and ended down about 3% by the end of the week. There are some changes with that are being affected by President Trump's threat of tariffs on the EU over the Greenland negotiations, and that is actually affecting the gold and silver market to some degree as well. Now, while those tariffs have been announced, like with the other tariffs, things have immediately been softened, and well, there might be some carve-outs, there might be this, there might be some delays. So we're still waiting to see what exactly will happen with that, but that is playing into not just the market, but the gold and silver bullion market as well. The week ending in the 10th of January, so the week before last week, initial jobless claims did fall to just 198,000 from 207,000 the week before. That lowered the 4-week average from 212,000. Slight good direction in that. Also, another good news, the average 30-year mortgage rate dropped a little bit to 6.18%. Still a far cry from the 2-point-something% that we were seeing a few years ago, but it is going in a helpful direction, which has led to a spike in refinances, as you might expect, and then purchase applications were also increased by 16%. So good, and also what we were rather expecting given the Fed rate cuts. In other news, President Trump announced that he would be moving to cap credit card interest rates by 10%. He has not yet announced whether he will do this by executive order or by expecting Congress to pass a bill. Now, this is a very controversial and complicated proposal, but it is not new either in the US or history. And it brings together a very strange group of proponents. Senator Bernie Sanders sponsored a bill in the U.S. Senate to cap credit card interest rates. In early 2025, Congresswoman Alexandria Ocasio-Cortez, of a similar vein to Senator Sanders, has also put forward similar legislation. But on the other side, a stalwart right-wing Senator Josh Hawley has also supported such legislation. So why is there such controversy and also support from people who don't agree on almost anything? There are several reasons for this, and one being there are different motivations. So for some, like perhaps the Senator Sanders or Congresswoman Cortez, they certainly are in favor of government intervening in many free market situations, price fixing, raising minimum wages, etc. But usually, and for Senator Josh Hawley, for instance, he would normally be opposed to price fixing or raising minimum wage, that sort of thing. So why are some on the right also supporting capping credit card interest rates? And for that, really, I think it goes to a historical precedent that's set that's really based on some biblical passages and some laws that God laid out for the nation of Israel. God, in the law of Moses, he had some pretty strong commands around interest, lending. The King James translated that as usury. Merriam-Webster defines usury as the lending of money with an interest charge for its use, especially the lending of money at exorbitant interest rates. But it's not exclusively limited to exorbitant interest rates. It does also just mean charging interest. So some of the passages that people might look to, Exodus 22:25, if you lend money to any of my people with you who is poor, you shall not be like a money lender to him, and you shall not exact interest from him. Leviticus 25:36 and 37. Take no interest from him or profit, but fear your God that your brother may live beside you. You shall not lend him your money at interest, nor give him your food for profit. Deuteronomy 23:19-20. You shall not lend upon usury to your brother, usury of money, usury of victuals, usury of anything that is lent upon usury. Unto a stranger thou mayest lend upon usury, but unto thy brother thou shalt not lend upon usury. That one was from the King James, as you could tell. In Proverbs 28:8, he who increases his wealth by interest and usury gathers it for another who is kind to the poor. There are a lot of these verses. So, is interest wrong? And you might get the impression from these verses that any interest whatsoever charged to a fellow believer. Note that in these passages, there was an exception made for strangers who are not of the same faith. So, is any interest wrong? No, it's not, because one, you can charge it to one who's not of your same faith. But then, secondly, we see in the parable of the talents and the minas, the bad steward who is fearful of investing the money and taking risks, puts it in the ground and buries it, and then gives it back to the master, and the master says, you wicked and slothful servant, you knew I was a hard master, etc., etc. And you could have at least put it in the bank, and you could have gotten at least the interest back with the principal. Clearly, there is not a problem from God's eyes to interest in all situations at all times. Just the fact that there's interest being charged is not contrary to God's design and commandments. So what are these situations here that are being spoken of? Well, they are specifically when there is poor or a brother in need, and we are lending to them. And then it says, we should not be like a money lender, which also implies there is a money lender who is doing that. So is there a difference between a company doing something as a company to provide a good and service and a individual coming to me and asking for a loan, and then me taking advantage of his need and his dire situation? Yes, and I think that also is how the reformers very much took that and interpreted it in light of all of Scripture. But to be fair, there are precedents throughout Christian history broadly where Christians and as Christendom, the broad population, we were all expected and held to Christian principles. And therefore, charging interest on loans was actually forbidden for, many, many centuries. And this led to some interesting workarounds. For instance, Jews who had not, were still rejecting Christ and had not become Christians, living in the Christendom sphere, they were able to lend and charge interest. And so they ended up becoming the only ones who did. And if you've ever read Sir Walter Scott's Ivanhoe or seen the movie, you'll know that that became a major source of contention through the ages. So then the reformers came along and they said, looking at all of Scripture, it's really not talking about business loans for sure. It's definitely not talking about business loans. Personal loans and whether or not a company is different than an individual, that's where things got into a little more disagreement. What should we do on that? It is difficult, and it is something that we don't want to encourage, one, government intervention in any areas that it shouldn't be involved in. Two, we also don't want to encourage people to take on more debt than they should. So that's also a consideration. Another is, will this cause credit card companies, which are actually banks, Bank of America, Citigroup, JP Morgan Chase, those companies, they're really the ones who do almost all of the credit card. About 80% of the credit card market is in the 10 big banks and lending institutions. So will this cap cause them to fail? Well, looking into the numbers, it really, that is a main driver of profit and earning for them, for sure. However, it is not the only source of revenue by any means. For instance, JP Morgan Chase reported in their Q4 earnings report that card services and auto, this is the category that they report the credit card revenue from. It supplied $28 billion in revenue for the year, and this isn't profit or earnings, this is just gross revenue. However, their net income or final profit for the entire bank was $57 billion. It definitely would affect them. It definitely wouldn't affect their stock price, which is largely looking at earnings growth. It would definitely reduce their profitability and their earnings. Is that alone going to put them under? Probably not. Question would be, is it right? Is it in line with biblical principles to actually come down and oppose usury? And again, it is something that's been debated. It's been debated. I think there is a difference when it is a corporation and not an individual, and when we're not taking advantage of a fellow brother in need. That definitely seems to be a biblical distinction there. Now, as we look forward, Capital Group put forward a very fascinating chart showing the difference between the dot-com bubble and the AI growth market that we're in right now. And this is something we've been talking about a lot, obviously. Now, while there are many similarities that we have mentioned, obviously it's a revolutionary new technology that no one knows exactly how it's going to play out, but we know it's going to change the face of industry, the face of human productivity, but how it's going to be monetized, what are the roadblocks, and who are going to be the winners, those are all things that are yet to be seen and determined. However, there is a difference. Two charts. And there's one on the left and one on the right. So the chart on the left shows the dot-com era, and the chart on the right shows the current AI era. The green jagged line tracks market prices, while the blue smooth line shows the actual reported earnings of those companies. Now, this chart, so the dot-com era chart, is really astounding. How much of a gap there was between the price of the stock and the actual earnings. Now, you might be thinking, as I was when I first saw it, well, there were all of these crazy startups in the late 90s that had no business model and had no track record whatsoever and were really just flash in the pans. And people were just excited because they had something to do with the internet. True, there were many of those. However, this chart is actually only taking into consideration the so-called four horsemen of the day, which were Microsoft, Dell, Cisco, and Intel. All very well-established, solid companies that are still around today and doing well. So it wasn't just that the startups were driving a real separation between price and earnings, but just the overall fervor of the era. Now, the current IA era, on the other hand, so that's the other chart on the right, is tracking much closer to actual earnings. And that's encouraging. And again, this is not just showing the overall market and therefore looking better than it should because you have a lot of companies that aren't inflated by the AI, excitement and fervor. This is only showing the top 7 most AI-exposed companies: NVIDIA, Microsoft, Apple, Amazon, Meta, Broadcom, and Alphabet. So it is a very honest, good comparison here between the most solid representations of the new technology in the current moment and the 90s. So that is encouraging looking forward for this year, because we're not as far away from reality as we were in the 90s. Still, there is a gap between the price and the earnings on many of these companies, and particularly some with NVIDIA and some of the others that are much further away from their actual earnings. So some of them, like Amazon and others, while they are exposed to AI, they are not nearly as exposed as or as affected by the AI excitement and fervor as some like NVIDIA. So it does smooth it out a little, but overall, it's a good indication that the overall market is actually supported by solid earnings in many areas. So that is good news. Now, the verse for this week, Proverbs 22:7, "The rich rules over the poor, and the borrower is slave of the lender." So in any case, whether interest rates and how those should be charged, it is always wise to avoid debt at all costs and wherever possible for this reason. Now, we hope you will have an excellent week coming forward and enjoy the snow if you're in an area that has snow around you. Leave a rating and review, and encourage you to buy our book, The Good Steward, which will help you set out a budget and set priorities so that you can avoid getting into debt as well. Join us next week, and we'll talk to you soon.
The topics discussed in this podcast are for general information only and are not intended to provide specific investment advice or recommendations. Investing and investment strategies involve risk, including the potential loss of principal. Past performance is not a guarantee of future results. All information herein is from sources believed reliable, but is not guaranteed for accuracy or completeness. The team assumes no liability for any errors, omissions, or actions taken based on this material. Information is as of the date stated and subject to change without notice. Securities and advisory services offered through Genius Wealth Management. Member FINRA and SIPC.